Price action trading. Hey guys, and welcome back to an exclusively new video on our channel Tradingfyive. And today in this video, we are going to talk about a very important concept in technical analysis, which is the price action. This is a technique or a form of analysis which is used by most of the traders in the stock market. And personally, I have been using price action in various of my strategies and trades. Now you see, the first thing to understand is that trading can be done in two ways. These are basically two methods you can say for trading in stock market. Now the first one is where you trade on gut feeling. That means you don't know anything about the stock, no analysis, no research. You are randomly trading on your emotions about a stock. Or maybe you are looking at some news for trading, or maybe using tips. And let me tell you that if you are the one who falls in this category of traders, then look my friend, you are having high chances of making a huge loss in the market. And the another category of traders are the ones who trade on the basis of technical analysis, price action, or maybe another form of analysis. These type of traders are generally profitable because their trade is backed by research, backed by a solid analysis. And so exactly in this video, we are going to understand about a major concept which is price action and how can we use it in the trading. Alright, so you see, price action means analyzing the price. Now you see, when you are using technical analysis, price is the only data that you get from the stock market. The price and the volume, these are only two data that you get from the market. So analyzing them accordingly and understanding the movement becomes really important. And you know, by just observing the price action, you can easily figure out which stock is bullish or bearish or whether you should buy or sell in that stock. You don't believe me? Watch this video till the end and you will understand. Alright, so on a very surface level, price action consists of these four things. First one is the trend, where there are three categories of trend, which is uptrend, downtrend and sideways. The next one is patterns. Those are either maybe candlestick patterns or chart patterns. The third one is the support and resistance, which are basically very important levels in price action. The last one is understanding the concept of breakouts. So I am going to explain all this concept in this video. And whether you are a beginner in the stock market or some intermediate level trader, when you watch this video till the end, I can say that you will get a better clarity about analyzing in the stock market. Alright, so make sure that you're watching this video till the end, do not skip it. And if you are new to this channel or in case you have not yet subscribed to our channel, make sure that you do it so that you won't miss any upcoming videos or updates on stock market. Alright, so let us start by understanding about trend. So there are basically three types of trend in the market, and the first one is called as the uptrend, where the stock is basically going bullish, going into the upside. And in this scenario, there is a pattern or a structure that the stock is forming, which is called as higher high and higher low. And just opposite of this is downtrend, where the price is going bearish, forming a pattern of lower high and lower low. And whenever the market is neither bullish nor bearish, that means the market is not even going upside or downside, just going straight, then we call it as the sideways market. Alright, now as you can see on the screen, there is a chart which is going bullish. That means it is basically in an uptrend. Now like I said before, whenever the stock is in uptrend, it forms a pattern which is called as higher high and higher low. Now you see, this is a high which is made by the stock and this is a low. Now after forming a low, what happens is that the price goes up and forms another high which is higher than the previous one. And it is called as the higher high because it is higher than the previous one, and since it is named as the higher high. And again the stock forms another low which is called as higher low. And you can clearly see that the stock continues in this pattern of higher high, higher low. And until the stock does not break the higher low, we can say that the stock is in uptrend. Now remember that whenever the stock has to go upside or bullish, it does not go in a straight line. The stock moves upside by forming this pattern of higher high and higher low. Alright guys, now let us look at the next type of trend, which is the downtrend. Now downtrend simply means that the stock is going bearish, it is going downside. And it is obvious that whenever the stock has to go downside, it will not go in a straight line. It forms the pattern which is called as the lower low and lower high. So as you can see on the screen, this is the low which is made by the stock, and that is a high. Now what happens is that after forming a high, the price breaks the previous low, and again it forms another high which is lower than the previous high. And this is called as the lower high. And until the stock is in a downtrend, this pattern of lower high and lower low will continue. Now one thing you can observe over here is that whenever we want to trade in a downtrend, that is we want to take a short trade, we will always enter at the top, that is when the stock has formed the lower high. This gives us a very low risk entry, and the risk to reward ratio can be really fascinating. And similarly in uptrend, we will take a trade at higher low. Once you practice this thing on the chart, you will have a better clarity. Okay guys, so now let us look at the sideways trend. Now whenever the market is neither going up nor down, just moving in a straight line, it is called as the sideways market. Now since this market is not going in uptrend nor in downtrend, we don't find any pattern of higher high, higher low or lower high, lower low. When the trend is sideways, we have to look for two things. First is the resistance and the second is support. Now resistance is basically a price level from where the price takes a turn and goes downside. It is basically a line which is not allowing the price to go up, and in opposite to that we have support from where the price goes upside. It's a quite basic thing that from support the price can go up and from resistance the price can go down. And you know why this happens in the market? Let me tell you. Whenever the price is coming near to this support, there are a number of buyers who are entering the stock, and all of them create a buying pressure, a demand in the market, due to which the price goes up. And similarly, whenever the price comes near to this resistance, there are multiple number of sellers who are ready to sell the stock at this level, and as a result of which the price simply falls down. So how do you basically trade in a sideways market? One thing which you can do is you can buy on support and sell at resistance. By doing this, you will be making some small profit. Because you see, whenever the market is sideways, you cannot capture a big range in the market. And so making huge profit in a sideways market is bit difficult. And so I suggest you to avoid trading in a sideways market. Other thing what you can do is you can sell call options and put options, which is called as option writing. But it is completely a different and an advanced concept. We will surely cover that up in some another video. And guys, one more thing you can use in price action is called as patterns. They are very important when it comes to price action and are basically very powerful for finding trading opportunities. And there are two types of patterns, which are candlestick patterns and chart patterns. And you see, I have made two separate playlists on candlestick patterns and chart patterns, where you will understand right from basic that how to use these patterns, how to identify them on the chart, how to use them with various indicators like volume or RSI, everything. And I am telling this to you because I don't want to include the concept of patterns in this video, or else this video will be very long. You can fix a time on your schedule and watch this playlist. And when you do so, you will get a really good understanding of price action and chart patterns. The link will be flashing above, or you can check out the description. Alright guys, now let us move to the next topic, which is the breakout. Now you see, whenever the market is in a sideways range, it moves between support and resistance. But it is not like the market will always move inside this range. There will be a time where the price breaks this support or maybe this resistance, and then we get a breakout. So breakout is nothing but whenever the price breaks this support or maybe the resistance. That is what you call as the breakout. And whenever there happens a breakout, we get to see a new trend emerging in the price. Like as you can see on the screen, there is this breakout from support, which tells us that this sideways market is converting into downtrend. That's right, whenever there happens a breakout support, we can expect a downtrend in the price. And similarly, when there happens a breakout from resistance, we can see a new uptrend emerging from it. Alright, so breakout trading is simple. Whenever the price breaks the resistance, we are going to go bullish, and whenever the price breaks the support, we are going to go bearish. Just keep in mind this concept. So these are some of the basic and important concepts in price action. What I suggest is that don't directly trade just by watching this video. I want you to practice first on the chart. Maybe you can do paper trades by using this concept, and even learn more about price action and understand about it in depth. And if I get good response on this video, I will surely make a part 2 of this video, where we will talk more about price action, some advanced techniques, which will help you in your trading. So lastly, thank you for watching this video till the end. If you like the video, please hit the like button. Share this video with as many people as you can. And lastly, subscribe to this channel and press the notification bell. Alright, and I will see you in the next video.